Welcome to The Explainer. Today, we're going to crack open the engine room of India's financial system to analyze a really critical piece of its infrastructure, computer age management services, or as you probably know it, CAMS.
Let's just dive right in with the one number you absolutely need to know. CAMS has a massive 68% market share in India's mutual fund processing industry. I mean, that isn't just a leading position, that's practically domination. And this quote, it perfectly sums up their business model. Just imagine this huge, constantly growing river of money flowing into Indian mutual funds. Well, CAMS has built the essential toll booth on that river, and it collects a small fee on pretty much every drop of water that flows through. So, how does this incredibly powerful toll booth actually work? And what is it about this market that makes it so, well, unique? Okay, so the industry is what you'd call a structural duopoly. I mean, there are really only two major players here. And CAMS is the undisputed leader, handling business for all five of India's biggest asset managers. So their main business, the mutual fund record keeping, that's where about 85.5% of their revenue comes from. It's solid, it's stable, it's linked to the assets under management. But here's the really interesting part. Look at their non-mutual fund businesses. That part is growing at an incredible 26% compound annual growth rate over the last 5 years. That's the real growth story here. All right, so let's see what kind of financial results this awesome business model produces. And honestly, these numbers are, well, they're pretty incredible. Okay, the first thing that just jumps right off the page is the return on equity. It's at a staggering 47%. Now, to put that in perspective for you, anything over 25% is usually considered world-class. So, yeah. And if that wasn't enough, it's backed up by a 62% return on capital employed. What this tells us is that the company is just wildly efficient. It generates enormous profits from every bit of capital it uses. And check this out, an EBITDA margin of 46%. That's a huge sign of what's called operating leverage. Basically, it means as they make more money, a massive chunk of that new revenue goes straight to their bottom line as pure profit. It doesn't get eaten up by costs. And as if all that wasn't enough, the company has almost zero debt. It's basically a cash printing machine. You know, it generates so much cash that it literally can't find enough places to reinvest it all. And that's exactly why it has such a high dividend payout, over 70%. It's just giving the extra cash back to shareholders. So, you'd think a business this amazing would have competitors banging down the door, right? So, what's stopping them? Let's talk about its competitive moat and why it's so tough to get past. One of the biggest defenses is something called switching costs. Think about it from the customer's perspective, a giant mutual fund. For them to change who handles all their records, it's not just about the money. It's a massive, high-stakes project. We're talking 12 to 18 months of potential chaos, data migration. It's a nightmare. So almost nobody wants to risk it. And when you look at the classic competitive forces, it just confirms how strong that moat is. The threat of new companies coming in, super low. Rivalry with their one main competitor, also low. Really, the only place there's any real pressure is from their big customers and, more importantly, the regulator, SEBI, which has the power to step in and say something about their pricing. Okay, but even the most impenetrable fortress has a potential weak spot, right? For CAMS, we have got to look for those cracks in the armor. So you look at this risk scorecard and your eyes just go straight to that one big red flag. See, there are a few things to keep an eye on, but the number one threat, the big one, is the chance that the regulator, SEBI, could step in and force CAMS to cut the fees they charge. And let's be clear, this isn't just some abstract, maybe it happens kind of risk. This single issue is the heart of the entire bear case against the company. A big regulator-forced fee cut could just slice 6 to 10% right off their core earnings. Just like that. Okay, so let's put it all together. You've got this fortress of a business, this almost unbreachable moat, but also these potential cracks in its armor. So what's the final verdict from all this analysis? Well, it really comes down to this head-to-head comparison. The bull case says, hey, the mutual fund industry is going to keep growing strong, and that could take the stock up about 36%. The bear case, on the other hand, is all about that regulatory risk and sees a potential downside of about 15%. This creates what investors love to see, an asymmetric risk-reward. You know, the potential upside looks bigger than the potential downside. And all of this analysis leads to a final stress-free score of 77 out of 100. Now, that's a really solid score, and it earns SAMs a verdict of accumulate. That basically suggests the analysis sees it as a quality company that could be a good one to add to a portfolio over time. And that, of course, is the ultimate question. Is CAMS a stress-free investment for you? That's something every investor has to decide for themselves. Now, before we wrap this up, I need to share a quick but really important disclaimer. The analysis you've seen here is purely for educational and informational purposes. I am not a SEBI-registered research analyst or investment advisor. You have to remember, investing in the stock market always involves significant risks. All the data and the charts we've looked at are based on public information and my own personal research notes, so please do not take any of this as a recommendation to buy or sell. You should always conduct your own due diligence or talk to a SEBI-registered professional before making any financial moves, okay? Great. Now, if you found this deep dive helpful and you want to stay up to date with more stress-free investing analysis, please go ahead and hit that subscribe button and press the bell icon so you never miss an update. And I really want to hear from you. Which Indian-listed companies should I analyze next? Drop the stock name in the comments below, and who knows, it might just be the subject of my next video. Thank you for watching, and as always, keep your investing stress-free.